We are in the biggest bubble in the history of the world, and it's certainly not over yet. Those in the Fed who have concluded perhaps things aren't so perfect will be silenced and will revert back to the status quo. Since Helicopter Ben stated during the financial crisis that there was no financial crisis, that there was no housing crisis, and that things were under control, we can surely take their word for it. Everything will always be contained. In their world, it's just digits on a computer. It's all just fiction. But to real people, the housing crisis was real. The foreclosures were real. The corruption was real. To the fellows at the Fed, don't you damn well forget it. You came here for the truth, so let me unveil that for you. Today we are going to look at this jam-packed chart GPS video. I'm going to get into the details that you need to know. I'm going to show you everything, how we have now gone into the level that is considered to be the biggest bubble in history. I'm going to show you the NASDAQ, how it's going towards 10,000. We are looking at the Dow Jones, going to break 30,000. Heck, the S&P is going to go towards 4,000 in a short period of time. There's nothing stopping it. Well, I'm going to give you some data today that shows just how overvalued this market is on so many different indicators. I've got tab after tab after tab open. Let's get into it right away. The Fed's interventions have been controversial. The Fed has originally intended to wind down the temporary operations at the end of the month. Instead, it has extended them until at least mid-February. Some Fed officials have signaled they'd likely go on for even longer, and markets don't see any imminent end to the repos either. This entire article out of the Wall Street Journal gets into the details of what's been happening. They're arguing back and forth still. Is it QE? Is it not QE? We even have admissions from the Fed themselves calling it QE. The major banks are starting to call it QE, but really does it matter? I call it Susie because, quite frankly, it doesn't matter. Then you look at an individual, as you see at the bottom of the screen, Neil Kashkari. We'll talk more about him in a second. I do believe that he will be the next Fed president, or at least a contender, simply because he's willing to devalue the currency all the way to zero. This article is massive. Again, it's getting into the whole issue, which is not important about is it QE or not, but they did cover a few important things all along in here. If you need to brush up on what has been happening, if you haven't been watching the videos here, this will get into a lot of that detail. One of the points they make at the very bottom is the fact that yes, in fact, we do see the correlation between the Federal Reserve's balance sheet and the S&P 500. The only person in the entire world who doesn't see that is Neil Kashkari. The ultimate point is here that what happens when they turn off the taps. Whether the Fed's liquidity injection impacted directly the economy or the pricing of assets or not is certainly true that a lot of people think it did. Whether anything is going to change if the Fed takes it away doesn't matter. If enough people feel it will, then it's going to impact markets. If they do believe that the quantitative tightening, if you want to call that, will have an impact on the markets, what do you think's going to happen? Obviously, they're not going to like it. It's not as if, well, we pumped in the repos this entire time to help everything. Now we're going to turn it back a bit and the market's just going to like that. I'm not really buying it, but we'll see what happens. Neil Kashkari's Twitter lit up after he made a ridiculous comment suggesting that there is no correlation in between what they are doing and what's happening with asset prices. I think you have to be completely blind, you got to be ignorant, or you got to be a liar in order to actually consider this to be reality. How can he write something as ridiculous as this and get away with it? That's just the way it goes. I actually posted a comment on here and basically said, this is how you become the next Fed president. QE to infinity. Whoever is willing to go further and further and further, they're usually the one who gets the promotion. Look at how it works every single day. Fed repo operations every single day, pumping up the market right at the open. Massive gaps have appeared, and it's just day after day after day after day. And if you don't see it, you need to get your prescription checked. This is very clear. When you see the Federal Reserve's balance sheet, the green line, and you match that with the S&P 500, this is starting from September, where we have the introduction of the repo operations in QE4. Look how correlated it has been over this period of time. We can stretch this out all the way back from QE1, and you will see the exact same thing. The two of them are mirroring each other, and it's not a coincidence. What if we take the S&P 500 price to sales ratio? Well, in fact, this has gone beyond what we saw during the ridiculous, absolutely ridiculous 2000 dot-com bubble. People were laughing. If you look at it back, let's say 5 years ago, 10 years ago, they were laughing at these statistics, saying, how could they ever get that high? How could we not see that there was a bubble? Today, we've exceeded that, but it's not a bubble. NASDAQ going, not just going, but rocketing towards 10,000. Who knows? Maybe it'll go past 15,000 before this bubble bursts. On the RSI, we are headed towards the highest level it has been since the beginning of 2018, which has only occurred a couple times since the dot-com bubble. We're almost there. And basically what that means is that it's extremely overbought. Everyone's just pumping their money in, but if you look at the actual statistics, S&P 500 valuations, all of these stats in red show you what is above their historical average. And can you believe it? 19 out of 20 of the stats are actually above their historical average. Looking at PE ratios and earnings and everything else, can you deny what we're seeing here right now? This is another stat, the value line arithmetic average gone into levels that we have not seen before. Essentially, this is like the average stock in the market. It's a different way of looking at it. Like all other indicators, I would take it with a grain of salt, but it just shows you that it is so excessive, so far beyond anything we've seen before. Bond fund flows annualizing $1 trillion if you look at it over the past 2 weeks. Massive inflows into bonds, but we see the negative yielding bonds actually receiving much less attention now than they were when they peaked out at around 17 trillion. US financial assets now 5.6 times the GDP. This is how you know something's messed up, because if you see where we had gone in the previous recession, trying to go back to the mean average, but it's just not happening. The GDP needs to grow substantially, which is not going to happen, or we need to see a revaluation of the asset prices. Quite frankly, I don't think that's going to happen either. Dow Automobile Index, one of the worst performing industries right now, and yet this is at a level we haven't seen for years. This is when you have a big disconnect in between reality and fiction, and that's depicted here on this chart. Natural gas continues to fall. I wanted to show you this and a few other commodities back to the level we haven't seen since 2016. Palladium has gone parabolic just over the last few years, basically a straight line upward. It's been absolutely insane. On this chart, we got gold, silver, palladium, platinum, and the dollar. Palladium, you could see, has been by far the best performer. Just to note, this is normalized as of the end of 2019. In a very short period of time, it has rocketed higher. So we know that the VIX index is always being suppressed. We have that information. We know that the Federal Reserve has the admissions of their short position on volatility. It's always near record lows. But you look outside of that VIX index and you take, for instance, the Europe's version of their VIX. That's at a record low. Never seen anything like this before. That shows you something very strange is going on. The calm before the storm, perhaps. The complacency, the euphoria, global FX volatility at a record low as well. We've never seen anything like this before, and I just keep saying that, but chart after chart after chart is showing that same bit of data. Industrial production is down. Real indicators are down. Stores are closing. Freight is down. Everything, if you look at it objectively, it's not good. It's weak. But the stocks, they're rising. That's for sure. Nobody wants to really look at it for what it is. Here's another chart just showing you the U.S. industrial production year over year, looking weak in 2019. There's the divergence in between the Dow Jones industrial average and the industrial production. This started a few years ago, 2015, 2016. We know that things were screwed up, things were broken. The market headed higher, and while industrial production did head somewhat higher, just like corporate earnings, it's basically been stagnant for years. Treasury brings back the 20-year bond to pay for the ballooning deficit. We've heard about the 50-year bond coming through. We'll see what happens with that. I think it's only a matter of time. But for now, the 20-year bond, we know there's going to be a lot of demand, if not from domestic purchasers. We'll see it internationally. And no fear, because the Fed is here just in case. That's all for this video. If you found it informative, hit that thumbs up button. You are supporting me by clicking one button on your screen. So I want to thank you for that. If you want to learn about passive income, about e-commerce, about business, I created a free e-course that 5,000 people at this time have joined, totally free. It's available at the AmazonGPS.com. If you are interested in the foundation, the history, the asset classes, that education that you were never taught in school, these two books will give you everything top to bottom. Check them out at the link in the description. If you want the audiobook, themoneygps.com. And don't go anywhere, because this video here has so much data. If you haven't seen it already, just click that and I'll see you there.